And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Hello, everybody out there. Welcome to the Coach's Playbook on Tuesday, March 15th, 2022. I am Jack Belzer, joined, per usual, by Dan Hodgman, John Hoagland, and Mick Aronimo. How you guys doing today?
Wonderful. How are you?
I am doing just fine. I got a haircut scheduled for Friday. They got delayed, so my hair's nuts right now, hence the chapeau, as they would say in French. So today we got a
Are you
topic.
saying my hair's nuts every day? Because that's why I wear a hat.
That's more your style. I'm not a hat guy. You know, it's an unusual thing when I wear a hat indoors. I think it's because my mom instilled that into me. It's like you can't wear a hat inside. She's straight out of the 19th century or something.
She's right.
Yeah. So today we got a topic that I kind of feel like I want to introduce it like one of those BuzzFeed articles or something, because we have 2 reversal patterns that you can trade right now. And hopefully it doesn't come off as sort of spammy as that, because Hoag actually came up with this topic for today. And I figure it makes sense to start with him because he has the charts and like to talk us through these markets where we're seeing the reversal pattern. So, Mr. Hoagland, would you care to take it away and enlighten us?
Well, sure. And I should probably be wearing a hat too, because the glare off my head is sometimes a little too much. But I've decided to embrace the bald. Reversal patterns. We've got a couple of reversal patterns, mainly in gold and in crude oil, that have somewhat already played, but now have some continuation play possible. So good to see everybody today, gentlemen. You're all looking good.
Thank you.
Can I share a shout out before we dive into these charts?
I suppose you could,
do that.
Mr. Mick.
Thanks. Yeah, I've got a good one today. Shout out to Sabur Ul Bashar, up 6,400, up 6,500. So big shout out there. That's a nice winner.
Wow.
Day two in the funded account.
No, that's a nice day. Congratulations. Yeah. That's fantastic. Keep it up.
Oh yeah, you do that every day, you'll be in good shape. That is for sure.
Dad always said, money's easy to make and it's easy to lose. It's just hard as hell to hold on to.
Yeah. Good advice all around there.
Yep. Okay, so why don't we go ahead and jump into the charts? I'm going to start with the daily and crude. And here we go. So those of you that have been watching the market forecast are pretty used to seeing these. This isn't really all that set up, but I do have the weekly kickoff levels on it. More importantly are the patterns that we're seeing in the current price action and the current price bars. We've been watching, if you've been on the forecast, we've been watching the open interest, the volume, as we've been kind of continuing to push higher. The open interest has not been all that gratifying. In other words, it has not really been increasing that much along the way up. So this whole move to the upside has been largely created by emotion, by fear. Without the money coming into the upside, the continuation is less likely unless we bring new participants into the marketplace. We have not brought new participants into the marketplace. As a matter of fact, we have a couple of pretty serious reversal patterns. Reversal pattern number 1. This is a candlestick pattern. This is called a bearish engulfing pattern. So we have a high here. The following bar opens and completely, the candle body completely engulfs the previous day's candle body, this particular one in a very big way. Reversal pattern number one, reversal pattern number two, the head and shoulders pattern. We come up here, we have a shoulder, we have a head, we have another shoulder. And once we break the neckline, which I'm calling weekly kickoff low here, which is 104.30, then we take what we would measure the high of the top of the head to the neckline. Once we break the neckline, the expected outcome of this move would bring crude oil back down to about 76, 77, 70, $78, all the way back down to this level.
You call that a measured move, correct?
Measured move, precisely.
Can I just say, fingers crossed that happens? I'd really like oil to come down a little bit.
Yeah, that would probably just mean good things in general for the world. I wonder, it's interesting how right now we're kind of at this point where you look at that really going back to the end of last year, because this is a daily chart. You can go back to December 21. What a persistent grind higher that was. And we're kind of right back after that initial invasion in the Ukraine, where you're right, emotions are all that. We're kind of exactly back. Current price right now, we're at 97.20, is kind of just a continuation of where we were there. And when we talk about emotion, is I think that there were a lot of, and I've felt this way before about things, is on that run up, the all-time high from, as I recall, 2008 is somewhere in the neighborhood of 150 a barrel. Mick, do you know the exact number there?
145. During that time, it really depended on what contract month you were looking at, because we were seeing such wide spreads or such large ranges in those spreads. So 145, 150. I always say 145.
145. Well, I imagine that as we got to that, 120 level, and we're just raging higher, that a lot of speculators were thinking, if we're going to push it to all-time highs, why not now, with a war going on with Russia and the Ukraine, very emotionally charged.
Mhm.
But once things have certainly not calmed down geopolitically, but I've heard psychologically, and they say this no matter what change in your life, I think it's either 3 weeks or 6 weeks. There's some amount of time before it becomes your new normal, right? And you adjust. We're very resilient. So even though terrible, crazy things are going on, once they've been going on for a while, it becomes sort of a new normal in some ways.
It's
we saw
considered
that a lot.
routine. So human nature, it's approximately 40 days of consistency creates routine and comfortability with something. So just to add on to what you're saying there, Jack.
Yeah, and
Go ahead,
Mick.
Go ahead, Jack.
Okay. And I think that's, we saw a lot of the same things unfurl. Like, think about COVID. I know that's when the Fed stopped and ended up being the absolute low, but that sell-off was about, 3-4 weeks, something like that, of panic before it became somewhat of a new normal, no matter how bad that normal is. I think the reason we saw such a crash in the Great Recession is because there were so many structural unknowns there, as far as you had banks collapsing, and those financial crises are like the one spot where I feel like there's no bottom where things can go. But I think we're seeing a little bit that psychological effect now playing out here. So I'll throw it back to Hogue to go further.
Yeah, great thoughts, gentlemen.
Before you change charts here, John, I want to point something out. John, if you could do it for us, just kind of run a simple trend line of the low side of this channel that ran all the way up, which I think is going to be kind of a pivotal location where this market kind of checked our lows here today. If we can,
I do have some comments on these candles in this chart before we move forward as well.
So when we just look at the low side of this channel, this market is starting to work itself kind of near where trend has been. And that's really where my biggest concerns will come in, taking this short, continuing this to the downside. Obviously, John's pointed out a really nice measured move. I'm a huge fan of them. I use them daily, regularly, and everything I look at. I absolutely love measured moves. And amazingly, they work out quite well, quite often. But we're going to start to see this market really struggle to push through, I believe, through the low side of this channel because we've created a nice trend to the upside. It's going to, I think a lot of people are seeing that same thing. And once we start to kind of approach the low side here, you're going to see some hesitation for these traders to jump out of their positions because it needs to start to move below that before we see that final dump. So just an area to keep in mind as we start to approach, watch for hesitation there. Don't feel like because we're stopping, it's going to reverse and rip back to the upside. Just going to slow down. That's going to be a high inflection area, high participation area that's really worth paying attention to.
Now here we've got 3 good points of contact. We're dealing with it today.
Yep.
Yeah.
That's more where I was looking, John. That
Mhm.
was the one that has my bigger attention was
Yeah,
was
3
that there.
points of contact. Just so you know, Dan, on the recap, in your honor, instead of calling them channels now, we call them Danels.
I like that. Mick, you said you had a comment before we switched.
I do. I've got some comments. First, I want to touch on John bringing up the open interest and not being too high. You know, it's something that
And
I
look
was
at the
also.
volume. Look at the volume on this thing. It didn't go bigger. It never went up. It went down.
Yeah, I from the open interest standpoint, I really like keeping an eye on that because while we have been in the bull market and we've, seen big upside moves, open interest not increasing tells me that, people that, open interest is taking the net open positions, long and short. If you don't have an open interest increasing, it basically tells me that you don't have people that have longer term conviction on their positioning.
Exactly.
So it's basically saying, people might be playing it from the long side or the short side, but they're covering at the end of the day. And, that's a smart thing here because we've seen such large dollar ranges in the oil. What I really want to point out is, after this big green bar up a little bit to the right of your cursor there, keep your mouse there. But if you look down at the stochastic oscillator, this is measuring momentum. So you actually have on that day, you've got price making new highs and you have momentum making new highs. All of the subsequent days, you have new prices in, new highs in price. However, the oscillator is not telling you that the momentum is making new highs as well. This is something we've talked about divergences in the past. This is something I really like to see. If you're making new highs in price, but your oscillator is not making new highs, it could give you a little bit of a heads up that, hey, we might be seeing highs here sometime soon. The momentum's not moving in line. So I always like seeing that for, that is divergence, higher prices, but lower highs and momentum. So that's something that, I don't really think of it as something that a trader needs to, see and then immediately pounce on and go short. As you could see, you would have probably, even if you had big bucks in your account, you'd probably gotten run out of any short positions early on. But another thing that I find interesting is those 3 candles on the very highs there. You've got the recent contract highs. It's a big up day. There's a huge tail or candle to the or a wick to the upside. So I mean, it tells you that people push that market so far up and then it couldn't even close higher that day, which is something that I find to be interesting. Looking at the following day, that up day, that's an inside day. So we had an up day, but we were inside. They call it an inside day because that entire range is inside the previous day's price range. Then the following day looks like we tried to make highs first. We failed, and then we had the very sudden sharp sell-off. So those are just some other things that I was looking at there. The inside day really caught my eye, and then that failure to close higher on that day where we had contract highs. You look at some stuff like that, and then you look at the lack of new highs and the momentum, and it paints a picture. It basically gives you a few stars aligning. Not to say that jumping in, you could see that and be like, okay, I think this market's going to turn over. The tricky part is where do you do that when we have these huge ranges? I think we were talking last week, you look at a quote board of the crude oil and it's moving in 20-cent increments. We had quite a large range just while in a 2-minute window where we were talking about the market itself. So just something I wanted to point out. I am noticing we're back to the trend, like we were saying. And basically getting closer towards levels where we had that slow grind up prior to the news and the emotions and the aggressive buying and jumping on the news.
Yeah. I mean, just keep in mind, like we mentioned last week, these are huge ranges we're talking about, where if you're not trading like the micros, you better have some serious money to fade these. That's what, $25,000 move on a oil contract. I mean,
6 sessions were, $35, $40 off the highs. That's insane.
yeah.
But it's
Yeah,
reality.
that's what I wanted to say
But it
too.
was foretold.
When you look at when you're looking at these markets. Oh. I was just going to add in when you're looking at these markets, right? We can look at these divergence. We can look at these types of technicals, which you have to always keep an eye on. And you can look at it and say, hey, we got a divergence. Look to sell this market. Market may sell, but it may, looking at today, right? We have a almost a $9 range here today. That's a massive move in one day for crude oil for anyone that's trading it over the last 10 years approximately. I think it was 2008 when we were seeing the big moves. So it's been over 10 years that we've been trading much tighter ranges. So we're seeing new market conditions that we've only seen for about 2 weeks now. And so you got to keep that one in mind. Just be cognizant of that when we're making these big ranges. You may be right on direction, but your risk is astronomical in these moves.
Micros are your friends.
They are. I think I said last week, you might need 200K, 250K in your account to trade a one lot in this market, in this environment. And I'm not exaggerating there.
Okay. So the last
we've
thing
been really quiet.
Go ahead.
Go ahead. No, that's all right. I'll save that one.
Okay. Last one I want to mention is we were watching open interest, and from about when the market started struggling to the upside here to the high, open interest had dropped approximately 10%. So the entire open interest of all the months of crude oil is approximately 2 million in open interest. In this period of time, we lost 200,000 in open interest. That's saying something. And when the market turns, even as day traders, it gives us information. We're going from looking to buy weakness to selling strength.
One thing in the conversation of open interest, if you're looking at commitment of traders reports that comes out on Friday, one thing you need to know is that data might come out on Friday, but it's data that was provided up until Tuesday of the calendar week ahead of that Friday. So it's missing information from Wednesday, Thursday, Friday. So just something to be aware of. You can always look at the CBOT or the CME open interest reports if you want to do the math to see the difference, because those do come out and publish daily.
Yeah, and keep track of that information, because the loss of open interest up here had me really talking about the fact that this is all emotion. This is not money. This is emotion. We want to go where the money's going. All right. Gold. It's going to look really kind of familiar.
Yep.
It paints
about that
almost a mirror image.
Okay. Move it to the upside. Volume on the high is pretty decent. Volume's been falling off ever since, but we have continuation. We have a bearish engulfing pattern. We have what appears to be a potential head and shoulders. And here's the neckline. The measured move from this head and shoulders puts us all the way down to approximately 1850.
And John, just to add to this too, when we say this is, first off, if you can move the chart to the left just a little bit so everyone can see it on what we're putting out, that much better. Thank you. Our picture, our faces cover the right side of the screen there.
Got it.
But like you were saying with crude oil, right? We saw that huge uptick was a lot of emotion. Same principle applies here, right? You got major conflict going on with major countries around the globe. There are a lot of concerns. A flight to quality is a move to gold, where people can buy into gold. They feel a little bit more comfortable holding on to that while there is major concern. So this is another emotional move. And then the reaction, right? There's a lot going on. We're getting more and more information about what's going on over there. People are kind of getting, like Jack was talking about, essentially comfortable with the situation, and you start to see relaxation, people cooling off a little bit, and that's what's bringing this market right back down,
Right back to the low of the Daniel.
Is it
right to the low of
is
the
it-
Daniel.
Is it too late to add the oscillator to this, the stochastic oscillator, like
Oh.
we had on the oil chart? I just want to
The slow.
whatever you had on the other one,
That was the
because
slow.
it kind of paints a similar picture. So John, if you move back to, well, let's just like that day where we made the contract highs, can you just hover the mouse over that? All right, so look down at the slow stochastic, that's where we are. It's up there, but if you go back 10 or so sessions to look at that other peak just to the left, I mean, this kind of paints a little bit of a similar picture. I mean, we had new highs in price right around there. Well, actually a couple of days over. Yeah, I just kind of wanted to point out, like, so you've got two lines. I don't know the distinction between the purple and the yellow line, but you can see, like, we made new high. We made new highs. Go to that bar on the doji to the left where we made new highs. I mean, we made new contract highs there, and the oscillator was already starting to tail down a little bit. And then further down the road, we're up $100 an ounce in gold, and we still weren't able to take out those highs on the oscillator. So
We
it's
still
another
have
thing,
divergence there.
yeah. So I just wanted to point that out on the gold. I don't have too many other comments around it. Thanks for annotating on the fly with me, John.
Hey,
No.
no problem. I'm an expert at this.
Oh, it's our gold aficionado here. Is this a
You have
market
volume divergence there too. One thing
Yes.
to point out too.
how much of that might be playing into the Fed stuff tomorrow? Like, is gold something I'd probably stay away from tomorrow?
I would probably be inclined to agree with that. I mean, the whatever the Fed does tomorrow, it's going to highly affect the dollar. It's going to affect pretty much everything. One last thing I want to show you in crude oil is an island top, not the
Crude oil or
island
gold?
top. Gold. Yeah, I'm sorry.
Okay.
Island boys.
So we have daily ranges coming up. We gap to the high. We gap away from the low, or we gap away from the high, leaving that gap. We've yet to fill that gap. This can be a powerful reversal pattern, whether it's an island low or an island top. It can be several days of an island top or an island low. As a matter of fact, we have several days of an island top in crude oil with just a few ticks of a gap that was left. So we have an island top here. Back to the daily, we have bearish engulfing pattern. We have divergence. Back to crude oil now. It's going to be hard to see because this is so far. This is a while back. This little line right here, if I spread it out, it's about a 3-tick gap that the market gapped higher.
And you're talking faster than the charts are moving for me.
I know. I'm sorry.
I'm like, wait a
So
second.
here's that gap.
Okay.
Okay. So the market gapped up from that level, ranged or continued for several days. This thing is jumpy on me. I apologize. I'm just so excited about this. So excited about all of this.
I can feel the excitement.
So we gapped up, we ranged, we came off, and then we gapped down. Even just by a couple of ticks creates an island top. So there's lots of reversal patterns right in front of us in these markets. Does it mean that the market has to go lower? Gentlemen?
No,
Nope.
nothing has to do anything.
Nothing has to happen ever.
We have a new acronym in the forecast and recap, ACH. Anything can happen.
I like that. All righty.
So that's it. I'm going to stop screen share so we can see all your guys' handsome faces.
I think these were fun charts to go through today.
Yeah, I think that's probably a good place to kick it over to Dan. We've had a lot of insights here. And if you want more insights, you can check out the forecast and recap. And on Thursday mornings, Make Hogue Money has been going excellent. That's where we do some live trading with Hogue, and the people in the chat will suggest what trades we make. And it's a grand time for all. Dan, do you have any words of inspiration in these dark times for us?
I don't want to call them dark times. I mean, let's try and think a little positive here, but I do have some words of wisdom. It comes from a gentleman named Peter Lynch. And I like this one a lot. Goes with Hogue's acronym, ACH, anything can happen, but you get recessions, you have stock market declines. If you don't understand that that's going to happen, you're not ready. You will not do well in these types of markets. So just to basically paint that picture, these markets can do whatever they want. If you're not ready for moves to happen or willing to accept them, then you're not ready to trade.
Yeah.
Good point. Yeah.
You probably don't want to check your 401k for right now.
No, I have all my accounts in a dashboard, so I try and keep away from that. I just put a sticky note over that part of it. Oh, yeah. Thanks for reminding me of that, Hogue. But anyway, I hope you guys are doing better out there, everyone. And I think that's probably all for now. So, Hogue, if you want to sign us off,
Sure.
Our way.
Hey,
Sure.
really quick, Dan, Jack, we didn't get the maroon memo.
Come on, guys. You didn't get that memo?
If John and I had shirts on like that, we could do Jersey Boys or something like that to sign
yeah.
off.
That'd be sick. I'd love to hear Hogue do some Frank Valley.
You just challenged him. Next thing you know,
Maybe,
he's gonna
2
sign us off
octaves
with a
low.
little.
Guys, what colored shirts are we wearing tomorrow?
Well, I'm currently wearing all of the maroon shirts that I own.
Yeah. Meanwhile, Mick's looking like you're ready to infiltrate a hidden base somewhere.
Oh, I have got a nice sweater on and just a little vest. It's cold in the house.
Nice. Well, in that case, Hogue, you can sign us off.
Fine. Yeah. Hey, all of these tea leaves, all of this information. And again, ACH, anything can happen. Be ready. Make sure you protect yourself always. Wear a stop. We'll see you next time.